This is our Forex blog for February 20th, 2013, and for many years, probably close to 6 or 7, we used our currency meter to find out which currencies are strong, which ones are weak, and we simply look to buy the strongest currencies versus the weak and sell the weakest versus the strong. Now we have those tools in combination with an actual chart of each index, of each currency. So we have the dollar index, the yen index, the euro index, the pound index, and I also have obviously the Swiss index, CAD index, Australian dollar index. And it really lets you see things that you never could before, such as double tops with the euro dollar or breakouts from underneath to above the previous day's high of that index. Those tend to lead to some big trends. You can see a little bit after 5, the dollar index broke out and kept going up. Back here around 4:30, the pound index broke down and trended down. It's likely to continue trending until it gets underneath these lower containment bands, and then it's basically moved statistically too far, and you're likely to get some kind of reversal. So basically, in a nutshell, if you have one currency that's trending up, let's say the euro dollars, it's above its hourly moving average, it's coming right up to the previous day's high, it's going sideways, it's likely to break out. You can see the daily, weekly, monthly trend is up earlier in the day, and the pound is going sideways and then breaks down underneath the multi-hour low right here, and then shortly afterwards the previous day's low. That's a phenomenal currency to be looking for buys in. Strong euro, weak pound, and let me bring up the first chart here. You can see when the pound got weak and the euro was already strong, this thing, shot up about 60 pips very quickly. And you also have the opportunity to buy this pullback, this little pullback here that you might have made 5 or 6 pips on, and this pullback here which went up 20 pips. Notice also what you can do on this, and this works on all time frames. Let's take this out to maybe a 30-minute chart of the euro. You can see multi-day movements, and you can find, and draw trend lines on the index. One of the best ways of trading is just to wait for a trend line to finally get broken. You can see the euro trend line got broken, and what oftentimes happens with trend lines of strong currencies is it did a retest on there. When it came back up and couldn't get back above and stay above that trend line, a very high probability of a reversal, and you can see the euro fell off a cliff. We already knew the dollar was one of the stronger ones, so it doesn't take a rocket scientist to know to look to sell the euro dollar. That's somewhere, I think around 10 that double top happened. So you have the individual euro chart, and you have a nice little low volatility pattern here. When the volatility gets into a little triangle like this, it gets smaller and smaller. Breakouts are very high probability. And you can see it quickly went 25 pips in about 10 minutes, 20 minutes, and then over the next couple hours fell another 75 pips. This is some of the ways that you can use our indexes. And you can also, let me bring up the individual ones. You can also draw fibs on this. Just hold down the shift key when you draw it, because our new fib tool auto locks, and this is a synthetic currency. When you draw your fibs on there, typically pullbacks up close to the 38% are relatively high probability. Anytime you have a little double top near a fib area, very high probability place to be looking for sells. And of course you could look to sell the pound dollar at that time. What time was that? A little around 11. So at this point you were looking for sells. It took it a little bit longer really to break down underneath these lows, but when it did, it fell 75 pips in about an hour or half an hour. These are some of the ways that you can use this. You can use event-based trading. A lot of times when currencies make new highs, it's very safe to buy the pullback. And you just simply want to, in this case, buy the Swiss or sell the Swiss, depending on if it's a top or bottom, against whatever the weakest one is. You know, you can see the Swiss was trending up today. We know that the pound was weak, and so selling the pound Swiss also made sense. If you were watching this chart earlier today, you knew the Swiss was strong. You might have even gotten short a little bit early and caught the first 20 or 40 pip drop here, and then you have, you know, this trade right here where you go short. And the real key to trading is small losses, big wins. When you are putting your stop right above a swing high, and let's say a trend line gets broken, you're risking this tiny, minuscule amount. And that's not even accurate because I put the high too high here. Let's lower that. That's how much you're risking. And most of the time, if you draw your fibs, these trend moves go to the fib area. Now, this case, it went significantly farther than that, but this is what you're anticipating making on the trade most times. Let me get rid of this fib so you can see it. So you can see if the trade works, and let's just assume you didn't have our statistical tools and you didn't know which ones are strongest and weakest. Typically, fibs are going to work 50 to 60% of the time, even without our statistical models, even without our currency index, even without our currency meter FX trend intensity showing you that this is extremely strong, plus 80. Plus 80 trends typically continue 80% of the time. But even using, you know, risk-reward ratios with other software products, if you catch 45, 50% winning trades and you have 2 times or 2.5, 3 times bigger wins and loss, that's the key to trading. And you have, you know, so many patterns you can look at for the Swiss. You know, you can see it broke out, pulled back, it went back above the previous day's high right here, and you have another little kind of flag pattern right here, and you're watching this. Notice it went up with incredible intensity, pulled back, it's just kind of inching its way up. It's either going to fail here, come back into the previous day's range, or it's going to break out again. So at 4:30, what a great time to get into that trade. And guess what? On the pound Swiss right here, that's exactly when it happened. So when you're watching this and you see the Swiss just go up, it's up near the upper bands, it's got incredible strength, you're going to hang on a little bit and probably catch another 30 or 40 pips in this particular example. Let's look at the CAD. Now the longer term trend is down, so you're looking to preferably sell this. You might draw a trend line, you know, trying to hit as many lows as possible. And when it has a false breakout from underneath above the point of control, this is where most traders have position on all the CAD pairs. Dollar CAD, Euro CAD, Pound CAD, Australian CAD, New Zealand CAD, CAD Swiss, CAD Yen. This is the price that most traders have position. So above that, it tends to be bullish. Below that, it tends to be bearish. So again, you're looking to sell this a little bit before 8. Let's find a currency that was relatively strong before 8. Well, you can see that this one is trending up and it's above the previous day's high. So you could certainly say you want to, around 7:30, look for sells in the CAD Yen. Here's 7:30. You can see this one's just kind of chopping around here. It breaks down. Now in this case, it only fell. Well, that's a pretty decent 15 pip move. You can see the yen at that time, 7:30, kind of stopped going up. So if you're in that trade, you know that if your strong currency is losing some strength, you're probably going to have a small loss, maybe 3 to 5 pips, a break even, or you know, likely in this case, about 10, 15 pips. Let's find another one at 7:30 that looks strong. This one had a false breakout above the previous day's high. It was coming back down and was going underneath the hourly, so you don't know if this is going to fall like a cliff like it did later in the day. So you wouldn't have traded that one. This one's not strong at 7:30 either. In fact, this is a wonderful reversal pattern. Went up to the previous day's high. Normally when it gets hit, you know, at that level twice and breaks out, it's going to cause a big move. The fact that it didn't, this one's very likely to fall. So I'm actually looking to sell the Australian when it breaks down right here. I mean, you just got to wait for a breakdown and look to go short, and you can put your, you know, stop on this actual index right above the highs here. If you get short right here and it fails, it comes back in this range, this is where you know you're wrong. You hang on to it until it hits that area. That's another trade we can go over in a second. But let me try to find a really strong one for the CAD at 7:30. Obviously, the dollar was really strong. So let's take a look at buying the dollar CAD at 7:30. Here is the chart. It's already up here at the highs, breaks out, and guess what? You know, you can draw your fibs on this because this wasn't that big of a move. It's very likely to go up to that area. If you're in this trade at 43, it's likely to go to the 55 area, and your stop is underneath here at 38. So you're risking 5-6 pips to make 10 or 11. And in this case, you know, you might have got out of that trade with your 10 or 11 pips, and there wasn't much of a pullback. You have a nice little, very little pullback right here. Nice little kind of flat top wedge pattern. And again, the farther up it goes, the less distance I draw my fibs at, because I don't want to get stuck in a losing trade or trying to catch another 10 pips when it doesn't have the odds of catching it. But right here, you're in here around 55. You might be out of this thing somewhere around 67. You made 12 pips, again, while risking very little. Now you can see the dollar just very strong today. Let's go back to that Australian here. When this thing broke down at around 8:30, what do you want to do? You want to sell the weak Australian versus a super strong dollar. Here's 8:30. Now, when that broke down, this one didn't quite break down for about half an hour. So you had a half an hour to watch this, wait to get in it. And this is probably the best, one of the better trades of the day, other than some of the pound trades earlier. If you just put the chandelier stop on here, and I like them to use a 2 times volatility stop. You're in this trade at 10, and you're out of this trade right here at 90. It's a 20 pip move. And in fact, you know, maybe you'd want to have, when you have a trend that's this strong, a little bit of wider stop. You can see you're in there at 10, and it got you out all the way down here at 64. So 45 pip win on that case. But you knew it. I mean, the chart before, it was trying to go up. It looked like it was going to go up. You might have got into some trades earlier with it, with a small loss. And when it comes down and it's just going sideways like that in a multi-hour rectangle pattern, those trades are very high probability. In fact, you know, you have another excellent one right here. It had a false breakout underneath. A lot of times when it comes back from below to above the previous day's low, it's going to shoot up, at least to the hourly moving average. And this one didn't. So you simply watch this, and around 12:30, when it breaks down right here, it's very likely to go down. And we know that the dollar is one of the strongest ones, so let's look at that 12:30 chart right here. It's also sideways down here. You're short around 0280. And again, when it's gone down significantly for the day, just draw your fibs. Don't get greedy, and look to get out possibly at this level right here. I might get out of the first half here and use a trailing stop on the second half. But normally when it goes underneath the 1.618, I'm going to get out. And you're probably also more likely to want to use a 3 to 5 pips per bar range chart, just because you're going to find a lot better exits. For instance, if you're short this around, where was the 12:30 right here at 0280, you can just simply draw trend lines over the bar's high, and when those trend lines get broken, you know, get out of the trade. And oftentimes you'll get out 5 to 10 pips earlier. And of course, you know, you could draw your fibs on these range charts pretty easily as well. And another thing you can do on a range chart, use our trend candles. You put the trend candles on there, only color candle. Guess what? Pretty good exit method, especially when it comes to the fib areas. If it stays red, you stay in it. First green candle, you're out. You know, and this is a great way to scalp. You knew the 12:30 to get short, you wait for a red bar, you're short at the close of this, 0278, you're out at the close of this, 67, so you made 11 pips minus your spread. You get a red bar right here. I always tend to wait for it to go, you know, 1 pip underneath that red bar's low before I get short, just to avoid some unnecessary losses. You know, just makes trading easier when you have a little bit of confirmation. I don't mind paying 1 pip as an insurance policy. 1 pip is nothing. So you can see, great move here. And again, draw your fibs on that last little move, and you'll, especially at this area, you're watching it like a hawk. When it's underneath here, first sign of it going green, I'm going to get out probably early into this bar here, maybe at 47. So we're short here. The last one here at 65. You made 18 pips on that last little trade. And it's really that simple. I mean, there's so many different ways and tools we have to increase your odds, to not get stuck in all the noisy, choppy price action, and instead wait for one currency that's super weak, another currency that's super strong, and just trade those two explosive currencies against each other. And your odds of success, and also of catching a bigger pip win, not just 3 to 15 pips, but 20 to 50 pip, goes through the roof.